Yeah, Monday. What's up, everybody? Monday morning. Welcome to today's edition of the Daily Market Commentary. I'm your host, Chuck Fulkerson. Hope everybody had a happy, safe, healthy, blessful Easter weekend as we are about to kick off our Monday in style. I'm a little bit late this morning on the DMC. Sorry about that. Small technical difficulties, but hopefully nothing will be affected all that bad. So let's go ahead and dive in. So today the S&P, we're down about 20 points, but really that 20 points that we're down, that came in the first 30 minutes of last night's trading. As we opened up, we gapped up and immediately sold off. Now, one of the things that I'm a big believer in is I don't really trade the opening candle on the Sunday night sessions. I usually wait for Sunday night to give me the first hour. And if we look, that first hour candle on the ES, we blew right through a 60-minute level of demand. Without it just cut through it like a knife through butter. Hit our 15-minute level, and then we got a little bit of a rally up. So I did get a couple of texts from people that caught that 15-minute level, got stopped out on the 60 and caught the 15 for a little bit of a run up. Now we are at a basically, we've come back to that high off of that level. So I'm going to leave this level here, but I'm going to switch it to a confirmation since we've already touched it once. And now we're kind of chopping below where this big candlestick was. I think that better chances that we continue to move up a little bit today, off of one of these levels. So let's see if we come off of basing in here and get a little bit of a pop higher. It might make sense to wait until we get a little bit better of a level that's created in the regular trading session, because none of these levels are phenomenal. You can take a little bit of a breakout above here. In the Nasdaq, looking at our NQ, the NQ actually touched our 60-minute level on Friday morning, gave us a little bit of a move away. That was about a 4-to-1 move. So those of you Thursday morning, that were able to catch our level, you got a nice little run out of that zone. And then price moved away from there pretty nicely. Now what we're seeing is that we have traded back into this hourly level. Prices have popped up from there again. So certainly I got to remove that zone. As we're seeing where we are in the hourly chart, the S&P versus the Nasdaq, both of these markets, S&P is actually a little bit stronger than the Nasdaq in the overnights. The Nasdaq's down a little bit more than a little bit less than the S&P, but from the move off the bottoms, the S&P's come up a little higher. And so in looking at that, if I go to my 4-hour chart, what I can see is that my 4-hour momentum is definitely waning. The 4-hour momentum is waning from our uptrend, but it's not over, right? And this is what I've said for, a week now. Do I think that there's another leg down in this market movement? Yes, I do, in the big picture, grand scheme of things. But it doesn't mean that I'm not getting long every chance I can on a pullback to quality demand. I'm looking at areas that would be lines in the sand, if you will, and potential short breakdowns if we come down into them. But so far we haven't, you're right? I mean, I've got a couple of blue lines here, both in the S&P and the Nasdaq, that I think are important lines in the sand that we've been unable to come back into. And so I continue to stay long until the market tells me not to. That's ultimately what I'm doing, is I'm following the 4-hour trend direction. And my 4-hour trend direction says look for opportunities to get long in this overall market. So as we continue to rally higher right now, we've come above this little wick over wick area here. We're just about to pop above it. And so I think you may get, if this gets a little bit of strength, then this can become a demand area. I'm still waiting for some of these clean levels to form. Haven't seen them as of yet. I'm going to be in the trade room this morning at 8 a.m. Central. So if you guys want to go into the member chat room, those of you that are Traders Army subscribers, go to the community tab, pull down to member chat room, and we'll be in there. We'll see if some of those levels form up at that point. Crude oil. So in crude, we had the level that touched the gap fill, and then it sold off hard. Now, it did come to our breakout point, but we didn't get any basing in front of our breakdown, unfortunately. So no basing at our breakdown point. And we came back in and retouched this area here, which is a very obvious area of potential demand, and got a little rally off of that zone. Now, the rally we got off of it seemed to be like it didn't sustain very well, and so I think now I'm looking at, if we pop back up into this region, a potential reversal for price to continue to head lower. So keep an eye on this later today if price hits that level and heads a bit lower. In gold, we are seeing what is typically a recipe for a breakout, but it's not always a recipe for an upside breakout. Because our upward momentum is definitely slowing, sometimes this will break out to the downside and pull back. So if we break out to the downside and pull back, we still have this level down in here at the at the European market open on the 15-minute chart, where I think price has a natural pullback point. So keep an eye on that area for some point today. We could theoretically also pull back into this little level here. This is also a very potential level. I chose the one that was right around the European market open, but both of those levels are potential areas where we can take a look at for today. All right, now, by the way, it's also possible that gold could break out to the upside, and you could get a run a bit higher above some here, provided that I get the basing. If you want a short-term day trade, you may be able to get a little day trade from 1746 up to 1754 for a small target. When I move into bonds and currencies, not a whole lot to talk about in bonds and currencies, as we have seen a lot of sideways price action. The bonds have continued that sideways price action. You know, we've rallied back up into this area of supply, but we hit it once, moved away, hit it again, moved away a little bit. Now we're coming up to it again. That's actually a really strong opportunity for a breakout when we see that. And so let's put a line here for a potential upside breakout in the bonds as we can jump up through here. In the Aussie, we can see another very similar pricing pattern where I think we could get a breakout above this region here. If not, there's a pullback somewhere down to this before this speed candle right in here. So keep an eye on that level. And then in the euro, very similar picture. We're in between levels of demand and supply. We do have this very obvious demand area right here after this big move up where we could see a bit of a reversal. The Canadian dollar, same picture. We've been waiting for the breakout above here. We got a little bit of a tease here in the overnights. My guess is most people weren't awake for that overnight little tease, and if you weren't, that's okay. You get another opportunity at it if it comes back into it. Great British Pound, Japanese Yen. Looking at those two markets, we can see that we are just kind of chopping around here in the pound. Not a whole lot of definitive price action one way or the other. I will say that down here is a pretty good area of demand formed last week. We've come back down to what could be a nice little level for reversal in here in the context of an upward trend. So if you wanted to even try candle to candle at this point, you could, for price to continue to move higher. And then looking at the Japanese yen, we had a supply level in the yen. We hit it last night, moved down, and then 6 candles later, we've really kind of done nothing. So now what I need to do, because the 6 candle rule has come into a play on this, if you're in that position, you'd want to take your profits or move your stop to break even at the very least. But ideally, this would be where my breakout would occur, would be above here for price to continue to trade higher, with an obvious target being this little area here where I have that in unbalanced wick over wick area. So hopefully this makes sense. If you guys have any questions, as always, send us an email, support@tradersarmy.com. Until tomorrow, everybody, have a great day. Remember, if you're Traders Army member, let's go to the member chat room at about 8 a.m. I will see you there, 8 a.m. Central. See ya.